Seems like we're able to go live.
All right.
I didn't announce it on Telegram or anything though. Oh, yeah, we're good.
All right. We can just warm it up for a minute before we dive into it.
Yes, sir.
Wait for some people to come on.
Yeah, we should have probably announced it, but that's okay. We're gonna answer. Hey, Dave, how's it going, man? We're gonna be answering the two most asked questions in crypto.
Win Lambo and win Moon.
All right, we're gonna let a few people roll in, and then we're gonna start it up.
Yeah, so I it seems like every video we make, we get that comment, right? Win Lambo, win Moon. It's kind of funny. It's maybe gotten a little bit annoying, but we're gonna try and attempt to answer that tonight, and we're gonna use a little bit of history to help us figure out where the future is.
So let's see. We've got a lot of people on. So go ahead and start it off, man. So intro us in, and then we'll talk about it.
Cool. Yeah. So thanks for joining, guys. Tonight we didn't send out an alert, so apologize if you're missing this going live right now. But anyone that's on, thanks for coming on. So as we said, right, the most asked question, or maybe the two most asked questions everybody wants to know is when Lambo and when Moon. I think it's kind of funny. I get a little bit bothered by that comment, but we thought, you know what? Let's try and answer that question. Now, what does that mean? When is it Moon? When is it Lambo? Lambo. So I don't know. When you make 100 grand, I'm not sure. What is a Moon? I mean, is it when it goes up 100% or 200%? Jacob, any idea what a Moon would be? Maybe.
Well, if we use the past as any indication, I would say 10,000% is a Moon.
Wow, 10,000%.
10,000% return. What do you think?
1,000%. A 1,000%.
1,000%?
A 10x return.
Well, I thought 100x was Moon.
Oh, well, so everybody has their own definition. I mean, to get 1,000% return is so special. Most of you guys probably have no idea. I've been a professional investor for well over a decade, and I've never seen 1,000% return in anything until I got into cryptocurrency. So I would say a few 100% would be a Moon to me, but my expectations are a lot different. Now, in our long-term portfolio, we did see 16 or 10 out of 16 coins do 1,000% return. So maybe I'm a little bit used to it, but because I've been doing investing for so long, I've never seen 1,000%. So for me, if I had a coin that could do 3 to 5 times return, that would be a Moon for me. I guess everybody has their own definition of that.
I'm talking in crypto terms.
Right.
Coming from Forex and coming from stocks, I would say 50% is Moon, man. I mean, I've been invested in Amazon for a long time, and I was stoked when it went up to, when I hit 100% return on Amazon. I thought I was a freaking genius. And then when I got into crypto, and Ripple hit 30,000% return, now I'm a little jaded. Even the trades that we hit 20, 30, 40%, people are still asking where's the good trades at. I mean, to me that's insane, coming from stocks where 10% was an incredible trade. Now we've gotten a pretty jaded perspective, but I still think we're pretty early in this thing.
Yeah, we're super early. So everybody might have their own definition of what the Moon is, but we're going to take a look at it from a historical perspective and try to answer the question of when Moon. So we have what we're going to do is we're going to take a look at, this is the cryptocurrency market right here. So this is Bitcoin, Litecoin, Ethereum, all the coins added up, that they all add up to be the market cap. And so you can see this is going from May of 2015. So this is the last 3 years. And so you can see it was basically flat. And then right around July of 17, it kind of started taking off. We obviously had that massive peak right around the end of the year of last year, right at first part of January. And then we had that massive sell-off. So you can see that. Now, the one thing that I want to point out is that You can see there's like a little bump and a fall right around July. And then you can see there was like another peak kind of going in right around October, and then another fall. Now, if I were to zoom in on just those in themselves look like massive peaks and drops. Now, when you pull back and you look at it over a longer period of time, they don't look so bad. They look like little blips in the road. The reason why I bring that up is because my guess is in a year or two from now, when we look at the same chart pulled out again, this massive drop that we're looking at right now is also going to look like a blip. And part of the reason why I say that is that this market is actually still so small. And actually, we'll get to that in a minute. I'm going to skip that. But anyway, just to put this into reference, as we were going from like this November low and ramping almost straight up into that, January high, that's when we were mooning, obviously, right? The market went, it went about 3x, about a 300% return, the market, right? So you can see kind of like it crosses that line at 250 billion right there, kind of end of November. And then we got above the 750 billion line to about 800 billion. So from about 250 billion to 800 billion in about, so it's about a 350% return, right?
Yeah. And I mean, overall, we saw a 10x return on Bitcoin in 2017 from about 1,000, or sorry, a 20x return, 1,000 to 20,000.
Right.
And so a lot of people that got in 2013, 2014, and they were able to hold through all the buys and dips, they're already Lambo if they took some profits. And they're probably on the moon. But a lot of people that maybe started in January, 20x didn't quite get them to where they wanted to be unless they were in some of the altcoins that had those big run-ups. And so how early are we? And let's talk about a little bit about time frames. I mean, when moon and when Lambo.
Each of you guys have your own ideas of what a moon and Lambo, what the moon is, or at what point you get the Lambo. But just to put into reference, this is kind of what we saw. We saw like a 3.5x return, a 350% return. And a lot of people thought we were mooning then. So, could we get back to that? I think a lot of people would just kind of want to see that happen, right? So to put this into some perspective, this is also this is the Bitcoin chart here. And so you can see it kind of crossed that 20,000 mark, came down, kind of shot back up, came way down, had a bounce, kind of like a little double top, and now it's back down again. Now, what I want to point out is that the Bitcoin, Ethereum, all these, they run on a technology called the blockchain. I'm sure you're aware. The blockchain is a new technology. And the reason why I say that is because every technology follows the same cycle. So we can look back at the automobile industry in the early 1900s. We can look at a more recent one, telephones, VCRs. We can look at the internet, which is the one that we're going to look at tonight, in the 90s. And they're all following the same cycle. So if you look at this chart, notice how similar this chart is to this chart right here. So this chart here is the NASDAQ. And so in the 1990s, when the internet first started taking off, all the internet technology companies were listed on this NASDAQ exchange. And so really this represents the entire internet technology boom. And you can see it, it looks very, very similar, right?
It looks almost identical.
Almost identical. So let's put them side by side. I mean, look at this. So here's Bitcoin and there's NASDAQ. So the big piece that obviously they're not identical. So history doesn't always repeat itself, but it's oftentimes very similar. And so then we look at this and then we say, well, okay, I see Bitcoin had that big drop and then it kind of had like this rise, double top, and then back down. So is it in this first dip on the NASDAQ, or did we already get that kind of second rise and then a second dip, right?
Right. And the question is how long will that take? And I think that's what everybody wants to know. Is how long that dip took, and then how long do you think will it take for Bitcoin to recover? And is it going to recover back to 20,000? I think that's the question on everybody's mind.
That's the question on everybody's mind. And of course, nobody has crystal balls, but everybody has opinions. I always advise not to really follow people's opinions. And so you're going to notice if Jacob and I ever give you an opinion, we're usually going to back it up with some facts. And so we have some opinions based off of historical charts. And again, it doesn't always follow the exact same path, but it's oftentimes very similar. Before we get into that, I'm sure most of you guys have seen this chart right here. I know Jacob loves this chart. He's thrown it around a bunch. And this takes you through the psychology, right, Jacob? Why don't you explain that?
Yeah, I just did a video on this, kind of showing that a little bit more in depth, but this is the emotional psychology of every single market cycle, whether it's gold or silver or tulips or Bitcoin or whatever. And a lot of times what it is it's people coming in, buying really early, super early adopters, or maybe early investors, or the angel round investors. And then what happens is it gets a little bit of public interest where it spikes up, and then it does what's known as a bear trap. So it'll basically go down, and everybody thinks it's going right back down to zero, but it'll pull everybody and get everybody to sell off, and that's where institutional money will start coming in and buying after that dip, and then it'll start to move into optimism, belief, thrill, and euphoria. And every cycle goes through that, and then it usually goes through the same period, whereas a lot of the people that bought during the thrill and the euphoria, that's kind of like when the public gets involved. That's kind of like the average Joe Schmo who gets involved in that period of time. And we saw a lot of that in December and January, and a lot of those people are already shaken out of the markets, especially crypto and Bitcoin. And
I love what it says there at the top of euphoria. I'm a genius. We're all going to be rich.
And the interesting part about that is, from a trader's perspective, that's when you start shorting the market. That's when the really smart, advanced professional traders who've been around for a long time, they recognize those signs. They recognize when parabolic structures are being broken. And that's how we were able to pick the tops on Tron, on Verge, on Ripple during those parabolic structures. And a lot of times during that initial sell-off, and we start making those higher lows after the initial peak, that's when we start to get into complacency with people that bought at or near the peak. They're saying, oh, it just needs to cool off. It just needs to, we just need to wait for another rally. And that's where it starts to get into panic, anxiety, denial, and all those things. And so looking at Bitcoin right now, I don't know if we're at the panic stage yet. A lot of people, they think that we're rock bottom, but I haven't seen the panic hit in. When I think once we get to like 4,000, I think that's when we'll see the panic really set in. But so again, nobody has a crystal ball, and the question is, when will the bottom be for Bitcoin? I don't think we're there yet.
Yeah. So again, right, nobody knows, but we're going to look at this and try and kind of put some timetables on it. But the one question I've always had when I look at this chart, because I know it's been thrown around a bunch, is like, this cycle right here could actually happen a bunch. I mean, if you zoom in on the Bitcoin chart or any chart, you can see this cycle playing out over and over. So that's question one. And the second one is, and the bigger one, which we're going to try and answer, is how long does it take to move through this? And so we're going to attempt to answer that tonight. And I want to show you this chart right here. And now I told you what I said is that every technology follows like the same cycle. And really what happens is every technology has an adoption rate, like how long it takes for that. It's called innovative diffusion. So that's how long this innovation takes to be diffused. So how long does it take till it receives adoption? And what's interesting is every single new technology that's come out has a shorter and shorter adoption cycle. So if you look at the telephone, is this black line here, it took the telephone about 75 years to get to 80% adoption. 75 years to get to 80%. Well, it took the cell phone about 15 years to do the same thing. So you see, so you went from one technology 75 years, the next technology 15. The reason why I point this up is because it took the internet about 15 years to go from like 1995, where the institutions really started getting in, till 2010, until we really saw internet sales like surpassing retail sales and whatnot. And so you can just see that each technology cycle has a faster and faster adoption rate. So if we look at this is again the crypto market
cap. Go back to that last slide really quick, because I just kind of want to, and the reason why each technology cycle is getting faster and faster and faster is because each technology is creating what we call the network effect. We didn't have a way to mass communicate until the telephone. Then
Right.
you had TV, which allowed for mass distribution of information, especially like marketing and advertising companies. Then you had the internet, and then the cell phone, and all those things improve the speed of networking effects. You saw Facebook that had this massive network effect, but then you saw these social media companies afterwards that grew faster than Facebook because Facebook allowed for that network effect to occur even faster, like Pinterest and these other companies that came like Snapchat and all these things afterwards. And so they're gaining users and massive network adoption. And that's why we think that crypto and blockchain is going to grow even faster, because we've already got the network built through all these previous technology cycles. That's
Yeah.
not something that people talk about a lot, but I just want to kind of touch on that before we move on to the next slide.
No, that's a great point, and I'm glad you brought that up because it's a massive point, and it's not to be overlooked. And so we have the network effect. So for those of you guys that don't know, the network effect basically means when one person had a phone, or let's say one person had a fax machine, that fax machine is not worth anything. As soon as two people have it, well, now it's actually worth something. As soon as 1 million people have it, it's worth more. So that's what's called the network effect. And same like I remember my first cell phone, and my first cell phone, it had like this really long antenna, couldn't put any names or numbers in there. And when I first got it, I didn't even really carry it around because I didn't have anyone to call and no one was going to call me. So the network effect wasn't there, right? But the other thing that I want to bring up that Jacob brought up a good point here is that the reason why it took the telephone 74 years to get to 80% adoption is because there was no infrastructure. And I did a video on this on Friday, so I don't want to get into it too deep again, but the infrastructure wasn't there, meaning that the telephone lines weren't ran along the roads, right? There was no switch houses, none of that. The internet was able to have a faster adoption rate because we used to get our internet through dial-up, which came through the phone lines. So the phone lines were already there, the infrastructure was there. And also with crypto, what we've seen is that, in the original days of investing in the internet, we didn't have the internet. So I couldn't make trades from my computer. I'd literally have to get in my car and drive down to my broker's office just to put a stock trade in. And obviously today we have apps on our phones and we're just doing trading 24/7. So things they're happening way faster.
And that kind of goes along with the last 6 to 7 months, is that adoption cycles is speeding it up quite a bit, because now you have apps like Abra, however you say it, Venmo, Cash App, where you can buy Bitcoin with a click of a button. And so it's speeding up the way that people can get into cryptocurrencies. And there's a lot of things that are happening from an education standpoint in universities. Blockchain is like one of the #1 studies that people are going into. And you're seeing that with a lot of other technologies, like the government, private companies. A lot of people are starting to get on this board. And patents are another big key and big clue as to what's going on, because you see companies like AT&T, Comcast, Verizon, all these guys are getting in, and it's a massive patent war when it comes to blockchain technology. They're trying to patent everything when it comes to decentralized X, decentralized Y. And so patents are another clue where that technology cycle is moving. And almost all the latest, and greatest patents are centered around blockchain and X industry, like healthcare, like pharmacy, all that stuff.
And the point to all that is all that is doing is building infrastructure. It's building roads to the city that now people can drive in. So again, there was a video dropped on Friday about that, if you want to go back and watch that. But basically, we're just showing that each technology cycle happens faster because, again, we're trying to answer the question, when are we going to moon, right? So
and now we can move on. Sorry, I just wanted to get that one point.
No, it was great. It was great. I'm glad you brought that up because, like I said, those are super important points that nobody should be overlooking. So going back to this, right, this is where we are today, but where do we go? What's the future? And obviously, we started out saying nobody has a crystal ball, but where do we think we're going to go? So this is the total market cap. This is where we are today. Obviously, we're way down. And this is Bitcoin today. We're sitting way down. Now, so what we're going to do is, in order to tell the future, we're going to look at the past. So if we go to the NASDAQ chart, before it was cut off at 2009, now you can see through today as well. So now this is the NASDAQ chart through current. And you can see that even though we had kind of that double bottom, that W bottom, the market took off like a rocket ship. And from 2009 until today has basically gone parabolic. I mean, obviously, if you zoom in, there was the big drop in 2009. There was a drop around 2011, another big drop around 2015, 16. But it's basically gone pretty straight up, yeah?
Yeah, and we're starting to see a little bit of a dip in the top companies, but that's just a big indication. We could see double, triple, quadruple the market cap of where we are with crypto. Crypto is such a tiny market, and I know you're going to get into that, but yeah, so it's a perfect example of where we might be in the scheme of things.
Yeah, and actually, that's a really good point that you brought up because I forgot to bring that back up. But if you look at this, this is the Nasdaq chart. So if you look at that massive spike in 2000, and then it dropped back down, right? At that massive spike in 2000, the market cap was about $6.5 trillion, trillion, and the crypto market only capped out at about 800 billion. I mean, just about 10% of the market. And then I want to add in that this market, the internet boom, was really just a U.S. market. Yeah, there was a little bit of foreign investment, but mostly it was just the U.S. And a lot of people didn't participate because they didn't have cell phones that they could. And so if we got to 6 billion or 6 trillion there in just a U.S. market, the crypto market is global with way more people participating. So we should well surpass that number. But again, we're just looking at this and trying to use it as a future indicator. Now, so what we're going to do is we're going to overlay the charts, and we'll look at them together. So when we overlay the charts, the blue line that keeps going straight up to the right is the Nasdaq chart. The red line is the crypto market, and the green line is Bitcoin. And you can see that they almost match perfectly with the run up, the spike, and the drop down. And it's not a massive coincidence because as we looked at this chart here, this is the psychology, right? This is what happens. And so that's why these markets match. And again, they don't repeat exactly, but they do mimic and mirror.
Yeah. And I'd like to see those. I'm going to do a little bit of a data analysis afterwards to look at them from both a linear scale and a logarithmic scale, so we can see how close they are. And because linear is just price action and logarithmic is percentage basis, so it'd be interesting to see the difference between those two just from a trader's perspective. I'm just going to remind myself to do that later, but it'd be interesting to see that.
Yeah, so we're just looking at history to try and tell the future. And so you can see on this chart, the peak was on the NASDAQ chart was in 2000. We had a crash into 2003. It came up into about 2007, 2008. That's when we had the financial crisis. That's what Bitcoin was born into. We had another drop into 2009, 2010. And since then, it's basically gone straight up. So you can see there's a blue line drawn across NASDAQ peak to peak. Took about 15 years. So from the peak of about 6 trillion, it took about 15 years until it got back up to 6 trillion again. All right. Now, the point that we're going to look at is if it took that 15 years, how long will it take us in crypto time? Because crypto time is way faster. And so when we overlay the charts, we can see that they've made their same run up and crash in about less than 2 years. So it's operating at about 10% or 15% of the time. So if the Nasdaq peak, the Nasdaq chart was peak to peak 15 years, we believe crypto can do it in about 12 to 24 months from peak to peak. Now the question is, where are we today? And we don't really know. Are we at that first dip like in 2003, or are we in the second dip in 2009?
And that's a question that we probably won't be able to answer, but my guess is probably the first dip. Do you have any thoughts on that?
Based off of the psychology of fear that we're talking about, like you said, I don't know if we're quite there yet. So based off of the psychology, it makes me think maybe we're still in the first dip. But when I look at just the charts themselves, I almost think we're at the second dip. So whether we're in the first or second dip, based off of the sped up time frames, we should be somewhere between 7 to 14 months. 14 months on the first dip, 7 months on the second dip, until we get back up to the peak where we were about 850 billion. Now, when moon. So we don't have to get back up to that level to be at a moon. You can see from 2009 until 2015, it was basically nonstop mooning. So at what point is it a moon, right? So hopefully we're going to be into that 2009 range pretty quickly, and then it'll just be a nonstop consistent moons over and over.
One thing I did want to talk about, because I'm seeing some comments in the chat, was isn't Bitcoin 10 years old? Isn't this technology super old? I just kind of want to put this in perspective for you guys. The biggest tech companies, just name a couple, Mark.
I mean, Apple, Google, Amazon.
Guess how old Apple is.
Well, Apple's much older than Google and Amazon. Amazon's like 1997. So the tech boom started in 1990, but Amazon didn't come along until 1997.
Yeah, so Apple's like 42 years old.
Yeah.
Intel, 50 years old. HP, Hewlett Packard, 79 years old. IBM is 107 years old. Amazon is 24 years old, and Netflix is 21 years old, and Google is 20 years old. So some of these companies that are some of the biggest in the world, they're far older than Bitcoin, and they took a long time to get to those massive market cap valuations. And the same thing is going to hold true for cryptocurrencies, especially with all the regulation and them becoming securities and all the things that we've been talking about for the past couple of months here. So I just wanted to put that in perspective for a lot of you guys. A lot of you guys are saying, well, it's a super old technology, but it's not really. I mean, Uber's only 9 years old. Snapchat's only 7.
And that definitely leads into a much longer conversation. And again, I'd recommend go back and watch the video from Friday if to kind of answer that a little bit more. But what I'm going to say about that is every technology cycle, as I already said, follows kind of the same pattern. So you start off with just the hobbyists and tinkers. Then you have the institutional investors come in. Then you have the public come in. And so the reason why I bring that up is with the internet, in the early 90s, 1990 to 1994, it was just a bunch of guys in their garages trying to send messages on their computers to each other. In 1995, we saw the first institutional money come in with an IPO on Netscape. And Netscape was a browser that allowed people to start using that internet technology because it wasn't really usable yet. And the browser allowed people to do that. So really the boom started in 95 to 2000. And so when you want to compare that to cryptocurrency, for example, sure, we had Bitcoin. Sure, we had some hobbyists and tinkers that were messing around, spending 10,000 Bitcoins on a pizza. But it's not until right now that we're starting to see institutional money come in to build, again, the infrastructure. And we're just now starting to get, and maybe not even yet, getting the tools needed to really use blockchain technology. So you hear about Amigo and what they're going to do and how cool that sounds, but you can't do that yet. You hear about all these cool things that this technology is going to do, but none of it's really working yet. Kind of like the internet in 93, 94. So yes, Bitcoin sounds really old, but when you look at the technology cycle, where we are through the cycle compared to the other cycle, the point that I made in the other video was we're in about 94, 95 right now. So I believe the next 5-year boom, well, in this market will be much shorter, is really where it's going to take off.
And the same thing that you talked about on your last video, I'm not going to reiterate it too much, but this is the point where we don't want to sell, because this is the point in 94, 95 where all these individual investors gave it right back to institutional money. And this is the point where we want to hold on for all that money to come in. And that's where it gets really exciting.
Yeah. So to answer the question, when moon, part of it depends on what you consider to be the moon. But based off of this chart and based off of history, it looks like somewhere in the next 7 to 14 months, we could be back up to that all-time high, hit that $1 trillion mark. I think Jacob and I both feel, well, I don't want to put words in your mouth. I think we could probably hit that by the end of the year. It's kind of my thinking. What about you, Jacob?
I've been thinking over $1 trillion by the end of 2018. Even with the bear market cycle that we just had, I just see a base of cash coming in. a base, just everything's working off this base. And we're starting to see a lot of coins come to life. We're starting to see a lot of projects like Golem just launched their mainnet today. That's a big deal. It's a really their ICO launched the middle of last year. And so a lot of these projects are really starting to come online and starting to build their ideas. And a lot of these are life-changing, innovative products that are coming online. And so that's where it gets really exciting.
Yeah, definitely. So, we use history that gives us the right perspective that we need to hold. And, going back to that chart, right? People had that despair when it dropped down. They finally said, you know what? I'll just take 10% of my money. I'll just whatever. It's never coming back. And they got out. But if they would have just held, unfortunately for them, it would have had to happen. They would have had to held 10 years or 12 years, but they would have got all their money back. They never would have lost any money if they would have just held on. And so that's kind of where we're at. It's like, don't sell now. Like, you're going to make the money back. You just got to be patient.
And the thing that we're trying to do with everybody, with our two companies, is we're trying to give you guys kind of the roadmap to the ones that are going to stay around, rather than being left holding pets.com. We want you guys to be left holding Amazon and Google. And that's kind of the ultimate goal that, we spend and our team spends so much time researching to find the best of the bunch. And instead of, trying to jump on hype trains with no real tech behind it, we really want to try and find the best of the bunch that are going to be around for the long-term haul. And so, that's our job, and that's what we focus on 24/7. This is what we do all day.
Yeah, that's a really good point that you bring up, Jacob, because what we didn't talk about is in this NASDAQ boom, when things ran up like crazy into 2000 and then it dropped off and came back, is that about just like any other technology cycle, about 90% of the companies disappeared. So just like the automobile boom, we had one automobile manufacturer, Ford. Within about 3 years, we had 150 automobile manufacturers. After the crash, we had 3, Ford, GM, and Chrysler. And the internet boom was the same. We had that big run up. And then, like Jacob said, pets.com was gone. So the market will come back. The technology will live. The market will be there, but not every coin that you see on the market today will be there. And so it's super important to make sure you're in the coins that are going to make it.
Yeah, we've got very specific criteria. We'll do a whole video on kind of maybe criteria or just maybe an outline of that. But I think this is a pretty good, if you guys want the foundational investor knowledge, this is the channel to get it from. A lot of the other channels out there, they're really only covering like short-term stuff. Here you're going to get the fundamentals. And the thing that we see the most is everybody coming into this market, especially December, January, they didn't have a plan. They didn't have a smart strategy. They didn't have risk management. And those are the things that are fundamental tenets for us. We don't like to gamble. We like to have a plan, and we like to stick to that plan as much as possible. Yep,
for sure. So again, learning history to tell the future. So hopefully that makes sense for you guys.
So when Lambo and when Moon is your kind of own definition, but as far as the cryptocurrency markets recovering, based on the accelerated time frame, we're going to give it 7 to 14 months. We think that May is going to be a massive month. May was a big start for last year. The consensus event in New York. Mark and I will be attending that. We'll be live streaming a bunch of stuff from the Consensus Network. We've got a ton of interviews coming up with a lot of really great developers for a lot of great companies. So the big thing is try and make sure that you guys are prepared. You know what you're getting into before May. We think that May will be massive. We're already starting to see some sparks of life. We may see one more downturn in a couple of these cryptocurrencies. We're not going to get into that on this video, but make sure you guys hit subscribe. Make sure you share. Make sure you hit like. Liking helps us out a lot. We love to see your comments. On Mark's last video, those comments were awesome, so we appreciate that. Make sure you guys get in our Facebook group on I Love Crypto, where we're in there all the time. We're sharing things. We're commenting. We're as interactive as possible.
Yep. And So we'll start bringing more content like this. The one thing I do want to point out too is like we talked about 7 to 14 months to get back up to the all-time high. But as you can see from this chart, it was like a a straight rocket ship up. So we believe we're going to have a massive bull run. I think Jacob and I both have said that we both believe that we'll probably see the biggest bull run that's ever been seen in any market in history. And so getting back to that all-time high is going to be quite a fun ride for sure.
It's actually kind of comical how you saw so many people taking out max credit cards, mortgaging their house when Bitcoin was $20,000, and now that it's 7,000, 6,000, they don't want to touch it with a 10-foot pole. So I find that pretty fascinating.
Yeah, and the reason why you never do that, and I'm sure you've all heard, we say it all the time, everybody says it, is never invest what you can't afford to lose. And the reason why is because you have to be able to hold through. So if you took out money on your credit card, or let's say you were going to take this trip where you had to pay for something in 6 months and I'm going to put it into crypto. Well, shoot, you're down really big on it right now and you need that money. So you're forced to sell at the bottom. But if you only put money in you could afford to lose, money you didn't need, then you're not forced to sell. Then you can hold it until it comes back and you never lose until you sell.
Go ahead and take your screen share off so people can watch our videos real quick.
Oh, yeah. Sorry.
Yeah, no, that's okay. There we go.
Perfect. So, you do need to know when to get out. There is a time. Jacob and I are both big time believers in taking profits. For me, I'm a very conservative investor. So I believe the number one way to make money is not to lose it. So I love taking profits along the way. Obviously with signal profits, it's always about taking profits. So there is a strategy to do that.
Let's just take a few questions. But before we get off, we'll just take like 4 or 5 questions. I really like this question. What do you think the main catalyst for the bull run you're calling for will be? We've got a lot of answers. We're going to answer that very briefly, Keith. I appreciate the question, and I appreciate you staying live with us.
Yeah, so we'll answer it really briefly, Keith, but what I would say is go watch the video I posted on Friday because it's specifically talking about this. The catalyst is the infrastructure. So if I went and built this city, but there was no roads going into it and there was no electricity or water, nobody would go live in that city. Once I build roads and highways, now people start coming. That's called infrastructure. And so what we saw in the internet boom in 94, 95 was even as the market was tanking, hundreds of millions or billions of dollars was being spent on the infrastructure like browsers, search engines, things like that to allow it to be used. And that's what allowed it to take off. The crypto place is the exact same way. We have this technology, but there's really no way to use it. So right now we're seeing hundreds of millions or actually billions of dollars being spent on infrastructure to allow the money to come into the space now. That's the catalyst. That's what's happening right now as we speak.
You'll also see ETFs, which I think will be a big boom to crypto. You'll see the securities coming online. You saw Kevin O'Leary securitizing a hotel. You're going to see and a lot of these technology companies that have taken a while. Once we get scalability, that's going to be a huge boon to crypto. Once we get consensus on what the hell it is, whether it's a security, whether it's a utility, once we figure that out, I think that'll be massive too. Bronte B said, a straight rocket ship. Look at the chart, Wankstein. It took another 6 years before it started skyrocketing on the NASDAQ. If you had watched the live stream and you had listened to Mark, you would have talked about the adoption of technology curves in the adoption. And so what took 7 to 14 years is now occurring in a much faster time frame, 7 to 14 months. So in order to get back to all-time high and even maybe past that, may only take a year, may only take 2 years, rather than taking as much time as we saw before. That's right. He kind of explained that in pretty explicit detail. Let's see. Any other questions?
Keith says that he agrees, but do I think institutional money will affect price? Institutional money will bring in money to build up the space. So there will be all new companies, money going into existing projects and new projects coming out. It's going to bring trillions of dollars into the market cap. Is it going to bring up Bitcoin? I don't know. But it's going to bring in trillions of dollars into the market cap. And you have to decide which of the coins are going to be the beneficiaries of that.
Someone asked, hold on,
I see Blue Raincoat wants to know what the name of my channel is. I'm on I Love Crypto. So I'm going to be on here a couple times a week. So stay subscribed to I Love Crypto and I'll be on here. If you want to follow me on Twitter, where I send out a lot of like fundamental stuff, it's at Strong Hands Hodl, Hodl, at Strong Hands Hodl. And you can follow me for fundamental stuff there. Otherwise, I'll be on I Love Crypto a few times a week.
I like this question. This is gonna be our last question. What is the best profit-taking strategy? That really depends on your plan, and it depends on your risk level, and it depends on your time frame. If you're a day trader, then you're going to take profit before you go to sleep, because day traders, they don't like to have their trades open when they sleep. If you're a swing trader, accumulation trader, momentum trader, your time frame may be 7 days to 30 days. If you are a investor, then your profit-taking strategy may be different. I like to, as investments, as long-term holds, I like to get my principal out after I've at least 2x'd it in crypto. Stocks are a little bit different. It depends on if it's a dividend yielding stock, etc. As a trader, I like to do my basically cost averaged exits. If you follow any of my trading stuff, I talk about cost average exits. So when it goes up 25%, I'll take a percentage out. When it goes up 50%, I'll take percentage out, et cetera, et cetera, et cetera. And it depends on the cryptocurrency. It depends on the trade. It depends on the chart. There's a lot of things. It depends on the news. It depends on a lot of things on how I'll cost average my exit. But if I hit, like, let's say, like my targets, I might leave 10% in or 25% in, and then I'll just set a stop loss below that, and I'll just kind of let it continue to ride, and maybe, let it ride as far up as it will. Like ONT, I hit targets, but I had like 10, 25% still in the trade, and so I'm still riding ONT, and I think it'll probably turn around a little bit. But that's just kind of one example of profit taking. Mark's might be a little bit different.
Yeah, but you absolutely nailed it, though. It really comes down to the strategy. And so I have different strategies for different times in the market and different coins. And ultimately, you just need to know what it is that you're looking at and what it's doing. So, I love to de-risk as much as possible. So if I get a 4 or 5 times return, I'll typically pull out my principal plus some. Unless the coin looks super strong, maybe I'll leave it in there. It depends on the coin. It depends on the strategy of what I'm doing at that time. But I love taking profits. I know we were pretty successful, took profits on Litecoin at like 368 right before Charlie Lee sold all his. We took profits on Ripple on January 4th, right at like 325. So we've gotten pretty lucky on some of those, but really it was because it was part of our strategy to, once we get the return we're looking for, to go ahead and cash out. Leave some in there for the upside as well, because you don't want to get out too early. And that's another big piece, which again, I talk about on that video from Friday, which is also not getting out too early. I made the point of, they say if you put $1,000 in Bitcoin in 2010, it would be worth 90 million today. And I said that none of you would have ever made 90 million, because even if you would have held through all the dips, maybe when that 1,000 turned into 10,000 you sold, or when it turned into 1 million you sold, or at 10 million you sold, would you have held until 90 million? And so really it comes down to the strategy, and I lay out the plan for you to know when to sell. So watch that video.
And I would say I would not have held.
Well, I think what you do, usually what my strategy is to sell some, get my principal back plus some, get 2 or 3 times my money back, and then continue to hold to the upside if you believe that there's more upside to be had.
Yeah, I put a big chunk in the markets, and my first purchase was Ethereum, actually, and it, I don't know, 5x'd in the matter of 30 days when I first bought in. So I took out a lot of money from the market that I kind of wish I had kept in, but I'm happy that I took that out, because it was just it was principal times 3, and then so anything I lost after that was kind of house money. And that's what I recommended a lot of people do, was just get your money back, or money plus profits. So then everything else is just house money after that.
Exactly. Exactly. And it
Um,
still sucks to see your house money, way up here and then crash down. But it's nice to know that you have your money plus profit already off the table. So it definitely, and it helps you hold.
yeah, and that's kind of what, I said this before, but if you've got a plan, stick to it. If you've got student loans that you're trying to pay off, and you made that amount or whatever, take it out, pay them off. That was your plan. That was your strategy. And then make more fiat, get it back in. If you've got a plan, stick to that plan. Don't start winging it. Don't go off the reserve just because you're seeing, just because you're getting FOMO. Make sure you stick to your plan. Are you taking percentages out? Whatever that plan is, are you cost averaging in on a weekly basis? If you are, just keep doing it. Even when it's at 20K down to 6K, just cost average your entries, because it's all going to average out over the long term. Year over year, we've seen like 34% return on Bitcoin, which has beaten the market pretty much consistently. And so if you'd been investing over and over and over, we've seen 34% on average return from Bitcoin. You're going to be making out like a bandit, even if you're investing at 20K, because you're going to get it in at 6K, and it's going to cost average out as the price fluctuates.
Yep. Yeah, and really having that right long-term perspective. I mean, this is a long game. This isn't a slow game. We're at the very beginning of a massive, massive movement that's going to make us a lot of money, but it's a long game. So it's not like you're going to Vegas you got 2 hours in the casino and you're going to try and make as much as you can in 2 hours. This is going to happen for years. So you don't have to hit every single one, and you don't have to take on additional risk to squeeze out a little bit more profit. Take your profits, put them in the bank, get in more positions, and just play the long game. Over years, you can accumulate massive, massive wealth. But if you take those unnecessary risks of trying to stay in longer to squeeze a little bit more profit or whatever, you're going to lose money, and then you're going to cripple yourself, in the long run.
And one thing I'll say is, as an investor and as a trader, the easiest way to trade is just with the trend. And there's a lot of different ways of determining trend reversals. We don't try and pick the top, and we don't try and pick the bottom. We wait for confirmation, and then we enter these trades. So when we get confirmation of a bear trend, we get out of the market and we exit, and we wait patiently, and we let the markets come to us rather than the other way around. A lot of people that are losing money, they're just impatient. And you don't want to overtrade either. That's the kiss of death. And so you want to make sure that you pick your positions, you pick your crypto, and you pick them, with intention, with research. And then when you get those positions, you hold your position and you wait for the market to come to you rather than the other way around.
Yeah, when you said about being patient, it made me think of something. So there's a quote that's thrown around a bunch. Warren Buffett, most well-known investor in the world. He said that he's often quoted saying that the markets are extremely efficient of moving money from the impatient to the patient. And so that goes around a lot, and that talks about what Jacob talked about. And part of being patient is not having to have that money. I don't need it right now. I can be patient. But the reason why I bring that up is if you guys didn't see the news, the Rockefeller family, who's one of the richest families in the world, definitely in the U.S.
Who's getting into Bitcoin?
Yeah, they've been around for centuries. So they have this private fund, Venrock, and their fund decided that now they're going to get into investing in cryptocurrencies. And when they were being interviewed, they asked them, aren't you concerned with the price of Bitcoin down right now? And their response was just so awesome that I had to send it back out. And basically paraphrasing what they said is that they're not really concerned about the price of Bitcoin over the next day, week, month, or even year. They are extremely patient, and they can wait until this trend develops. That's what they said when asked about it. And so it's all about being patient.
Yeah, patience is your friend in crypto, and don't chase rallies.
Never.
Cool. Well, thanks for joining us live, guys. If you guys want, make sure you follow us on Twitter. Hop in our Facebook group. If you're a VIP, make sure you get your Discord set up. Get in there because we've been posting lots of great content in there. Lots of awesome trades the last couple of weeks. I think we've hit almost the top trades. Appreciate you guys. Thanks for following. Thanks for watching, and we'll see you guys on the next one.
Yep. Thanks, guys.